Good evening, this is Ryan Mallory for SharePlanner.com. It is August 6, 2010, and what a crazy day we had in the market today. You had the monthly employment report that came out at 8:30 this morning, and we saw a pretty heavy sell-off right off the bat, about 1%. And then when the opening bell rang, we saw the major indices try to close the gap. The Nasdaq actually did so, but not too far into that attempt, the bears got control of the market again and pushed the major indices about 2% down across the board before we saw any kind of significant rally thereafter. Which brings me to my next point. The bulls definitely made it clear today that they are going to continue to buy. No matter what the news is, they're going to continue to buy every dip that there possibly is, especially when there's a pretty steep sell-off. There's no lack of confidence to keep buying every dip in sight. So let's go ahead and look at the S&P here. You got this nice trend that's been developing since the June lows, and since then it's been bouncing right off of it, and we bounced off of it again, and each time we've bounced off of this trend line here, we see a nice little pop in the market. So here was Monday from the previous Friday when we kissed the trend line. We had a pretty solid up day, and then once again here we touched the trend line, and a couple days later we rallied very strong, and the original trend line where it's all started at had a huge rally. So I'm not sure. I'm not saying that we're going to definitely get a rally on Monday, but I think after today's action, where it looked like this trend line was in jeopardy, the 200-day moving average was in jeopardy of price closing below it, the bulls mustered whatever they had left and was able to close not only above the trend line but also the 200-day moving average too, which I think puts us in a nice position to push through the June highs here, or the right shoulder on this inverse head and shoulders pattern. Here's, for those of you who are not familiar with this pattern, it's basically looks like the head and shoulders of a human being. You got your left shoulder, and then you got the head, and then you got your right shoulder, and then this yellow line here represents the neckline of that pattern. So here's the low from the left shoulder, and here's the lows from the right shoulder here, and then we did break below it, but it turned out just to be the bottom of this nice sell-off from the April highs, where we developed a new trend line going forward, and right now that's intact. I don't see any reason to have any short trades at this point. I think that at this point there's a very high risk and low reward to any short position that you might initiate. So I'd stay away from any short trades right now, especially any leveraged ultra ETFs. I definitely wouldn't be messing with those to the short side. So a couple other charts here. Go look at the portfolio. Here are some of the positions that we have open. ENZN, stock that I picked up today. As you can see here, it has been rallying very nicely. I'll draw the trend line here for you. As you can see, it's been making higher lows and higher highs the entire time. Bounced right off of that trend line today. I bought around 10.75, so I didn't really make any money off of it today. In fact, I might have lost a few bucks, but I think it's well positioned with market strength going forward to push much higher. Another position in the portfolio, Intel. I bought on this pullback here. Not too crazy about how it's dipping below the 15 to 200-day moving average here. Hopefully that doesn't act as too much resistance to the upside. But like all the other stocks out there, we get some decent buying momentum in the broader markets. Intel will definitely follow suit. So QQQQ, that's basically the equivalent of the Nasdaq. Bought some of that today as well. This one is setting up very nicely to break through this right shoulder too, and we could see that in the next day as well. Visa is a stock that I bought trying to trade off of this bottom here. been taking a heavy hit since its days of almost being at $100. But there was some news the other day that I think it was AT&T and Verizon was going to start trying to do their own credit card system using cell phones, and so people sort of got a little bit nervous about Visa and MasterCard, and there was some heavy selling that happened as a result. But anyways, you can see it's holding this $70 price level quite nicely. I got a stop loss, I think, at about $68.99. And then there's XLF, the financials. You got an inverse Head and Shoulders, which is basically the opposite of a Head and Shoulders pattern. Left shoulder, head, right shoulder, and then you got a very nice neckline shooting straight across here. And we broke the neckline to the upside a few days back. That's when I got in, and then since we've pulled back a little bit, it doesn't violate the pattern or anything. It just a little overbought, pulled back, but it formed a nice doji candle right there, or a hammer, or whatever you want to call it. The last thing I wanted to show you real quick is a trade that I made today on the S&P using SPY, the ETF. I'll pull up the 5-minute chart on this one here. Alright, so today we had the nasty gap down. I've talked a lot about gaps and how to play them. I'm not going to get too much into it here, but basically I didn't play the gap. I thought it was a high risk, low reward trade. I didn't think there was much of a chance of us filling the gap, which is what happened. We did not fill the gap this morning. So we go up, we try to fill it, but later in the morning we just took a huge dump, and market bottomed out about 2% down. And then you got this channeling here the rest of the day, and at that point my personal portfolio was down about, I want to say, almost a full percent. So I was doing better per se than the general markets, but still I don't care for losses too much. But I started noticing this little pattern on the 5-minute chart on the SPY. Let me see if I can draw it here real quick for you. So it's a nice little wedge, right? Let me get that a little bit better here. Okay, there we go. Had a little bit of a wedge here, and I wasn't sure if it was going to go up or go down, as to where if it was going to break out or break down. That was up in the air. But I continued to watch it, and it was just going up and down, up and down, up and down, and then finally we got a break at about 11:47 is what was a good sign right there. And I put in a buy order because typically when they break through support or resistance, there's typically a opposite reaction that allows you to get in a little bit cheaper than where the breakout or the breakdown point was. So I was able to do that, and then from there we were off to the races. I had a stop loss right below this low of the day candle, so it was about 1091, and I had a target price of about 1189, which didn't take too long at all. I think I was in the trade for about 20 or 30 minutes before my price target was reached. I could have gone much higher, but I was actually away from my computer during that trade, which isn't something I typically do, but I had my stop loss and my target price in there, so I could have probably made some more if I let it run, but I was going for quick pop to try to offset some of the losses in my portfolio. As a result, I actually finished up on the day at about 0.6%, so very happy with that. Not arguing with anybody considering where I was at earlier in the morning. In any case, that's it for now. I hope you guys all have a great weekend. As always, if you have any questions, shoot me an email or at spc@shareplanner.com, or even easier, just leave a comment on one of the articles and I'll always get back to you. And there's no question that's too stupid, or there's maybe questions that are too difficult for me to answer, but definitely don't worry about asking a cheesy question or anything. I'm more than happy to answer them. Alright folks, have a great week and God bless.